Hi everyone, today just a quick video to talk about the recent earnings from Caterpillar, one of my favourite companies, and why I believe this is now even more of a buy than it already was. So Caterpillar's profits and revenue topped estimates. And as the title suggests, supply chain snags loom in the future, which perhaps is why the stock results have been capped to a roughly 3 or 4% gain. So as you can see in a brief summary, the third quarter earnings beat analyst expectations of basically every category, as general demand in the construction and mining sectors outweighed the ongoing supply chain issues. Caterpillar's results show that the economy, like a resilience in the economy, and this Caterpillar themselves have suggested that the supply chain challenges will have impacted their results and capped them somewhat. So they're expecting the fourth quarter to be even stronger, which is fantastic. I don't see this demand letting up anytime soon, really. If the infrastructure bill that is going through American Congress right now ever passes, which it may or may not, but hopefully it will, Caterpillar could be in for an enormous revenue tailwind for many years to come. It's basically a generational bill that could really push Caterpillar's revenue up long term. So I really like the outlook of this company in 10 years. Even without that bill, this is one of them stocks that you can really just like set and forget, buy at a reasonable price and hold forever, barring something extraordinary. So looking at the prices it is today, like I said, it's up about 3.5% today on this news. I think that's capped a bit because of the mentions of supply chain worries, because obviously it's a lot of heavy machinery that in a similar to like Lockheed Martin, as I mentioned the other day, Lockheed Martin requires big supply chains for its big machinery. This is a similar situation. It's about 110 billion market cap as we stand today, and the PE, as it says there, is 25. That's a trailing PE. Forward PE is about 16, which is very attractive for a company of this quality, in my opinion. Forward dividend yield of about 2%, slightly above the S&P average. Not superb, but consistently growing. And as I mentioned before, Caterpillar has paid this out for over 25 years, being a dividend aristocrat. I think it's close to 50. And the company is now, as we speak, is currently about 20% off its 52-week highs, which are roughly all-time highs. As far as I'm concerned, this is cheap. You're looking at a PEG ratio of about 1, which is considered strong. This company has got a strong 5-10 years ahead of it. I think it's a strong company for the long term. At 16 PE, which again is roughly it's more than half the S&P's current PE ratio, which is about 38, 39. This is dirt cheap in my opinion. As you looking over on the right hand side, in the last 52 weeks, it's slightly underperformed the S&P by 10%. Not the end of the world. Like the S&P is carried by a lot of heavyweight tech companies. This is to be expected. Caterpillar didn't really get hurt that badly by the 2020 drop. So in the last year, it's had a low of 150, high of 246. It's about in the middle of its range, and it hasn't really changed over the last 200 days, as you can see from the moving averages. I think this is a great buying opportunity for Caterpillar, and as you can see, you'll see from the financial summary now, just a really strong quarter compared to last year, and ongoing, it looks like it's going to get even better. So sales and revenue up 25% to 12.4 billion for the quarter. You just don't really see that for this type of segment in big industrials, big machinery companies like John Deere and Caterpillar. It's pretty rare that they get to grow sales and revenue by 25% in non-strange years. Like the infrastructure bill isn't here yet, and we're still seeing these incredible revenue growth numbers. Operating margin 13.4%, pretty strong for this industry. Not amazing when you're used to looking at SaaS companies, but strong. Up 3.4 points. Profit per share up 113%. This is fantastic. Adjusted profit per share up 75%. Again, this is exactly what you want to see. Caterpillar has a really strong record of dividend growth and returning cash to shareholders by repurchases. Exactly what you want to see if you want this to continue. And as you can see, Caterpillar makes mention of its dividend paid. I was wrong earlier. It's actually 27 years. Dividend paid annually for 27 consecutive years. It returned $2 billion to shareholders through dividend and repurchases. again, excellent, and this is going to continue. That means it's probably done about 8 billion for the year because I don't think anything's changed dramatically. That's superb. I mean, 8% of a company's market capitalization basically returned to shareholders every year, and free cash flow is looking strong. So looking at the financial results compared to last year in a similar graph, you can see they're just looking excellent. I mean, that revenue number is really knocking me sideways that they managed to grow revenue quarterly 25% pretty much in a year for a company of this style. That is extremely strange, especially when you consider the price it's trading at. And looking at as they go ahead, this is what I mentioned, the supply chain issues that they're expecting. The good thing about Caterpillar is they can anticipate and increase prices with higher costs, which is excellent. This is exactly what you want in a company like this: is strong pricing power. Perhaps the margin will be slightly lower due to the season pattern. I don't think this is anything to worry about. Throughout the rest of the year, they'll make up for this in averages, and they're expected to meet the current targets, which is excellent. And as I mentioned earlier, stronger sales in the fourth quarter to be expected. I mean, what can I say? This is an absolutely excellent quarter, and if it weren't for supply chain issues hitting all industrials and pretty much all industries, this could be a 10% gain on this report. So to summarize, I'm really happy with where Caterpillar's going. I see this as a stock that you can hold basically forever, but especially over the next 5 to 10 years, if that infrastructure bill passes, this is going to look like an incredibly cheap company right now, in my opinion. I think this could easily be, with a little bit of multiple expansion and some revenue increases, this could be a $300 stock in 1 or 2 years. So I'm taking this opportunity to buy and increase my position while it's at these all-time low prices.